don't quit. Even if it sucks, even if you blew up your account once, even if you blew it up twice, even if you blew it up 3 times, right? Don't quit.
Boris Schlossberg, welcome on the podcast. How's it going today?
It's going great. I mean, it's a roller coaster ride every day. Today, especially, we're talking literally one day after the flash crash in the yen. So, my one eye is peeled on the screens, one eye talking to you, because every single moment, everything is changing around here.
Yeah, I got a lot of messages today about that, and you probably did the same. People asking about what happened and stuff. And we can talk about that later too. But I want to get a bit of background about yourself. So tell people who you are, what you do, and just a bit of background about yourself.
Sure. Well, my name is Boris Schlossberg. I'm the founder of bkforex.com, which has been a research FX signal and research website for more than a decade with my partner Kathy Lean. We've been in the FX business for like 20 years. I started out as the chief currency strategist for FXCM, and then we moved over. Both Kathy and I moved over to GFT. When we were at FXCM, we actually started dailyfx.com, which is still the biggest retail FX portal in the world. When we started, it was like one single web page and just the two of us working overnight. But I've been trading FX for more years than I care to admit at this point. I can't believe it. And before that, though, is interesting is that before that, I actually traded almost everything else. I traded equities and I traded futures and I traded a little bit of options. But when I kind of came to FX, it was like I've only been trading that for forever. Even though, sometimes people see me on CNBC all the time because I contribute to them and I talk a lot about stocks. And ironically enough, of course, I don't trade any stocks. That's the dirty little secret. But, having the great kind of macro background in FX, I've actually been pretty good at, figuring out the various flows in equities, despite the fact that I really don't trade them that much. So I think it's a great discipline for anybody who wants to invest or trade, to really learn about the currency market.
Yeah, that's a pretty big background. So I want to hear now about your beginnings as a trader. So how did that start, and what was the first story of you beginning to trade?
Well, so I had a very kind of a strange path. I started out like straight up in Wall Street, Drexel Burnham Lambert, which I don't know how old your listeners are. Most of them don't remember it, but it was the sort of the big junk bond firm of Michael Milken. It was actually the big firm in the 80s. I started literally 55 Broad Street, which now is no longer even a Wall Street trading place. And, I was like right in the middle. I actually lived through the 1987 stock market crash at Drexel Burnham Lambert. And then after that, I actually left Wall Street for a long time. And I moved into high technology. And it was very funny because I sort of really participated in the whole bubble of the late 90s in the internet bubble. But after that, after like the 2001 bubble crash in the internet stocks, I was trading all the way throughout, just from my own account. I really wanted to get back into trading, but I really didn't know what I wanted to do. And there was this ad for this like company who I'd never heard of, saying, hey, we're looking for staff. And look, on a whim, I just sort of answered. I had no idea what these guys were. And it turned out to be FXCM, which, became the largest retail online broker in the world. And I kind of literally stumbled. I just sort of stumbled my way into a profession in FX. I really loved it because FX is very much macro based. It's a combination of both economics and politics. And my education has been in economics. I've always been a political junkie. So it became very, very interesting and easy for me to understand all the major, flows of FX. Then it took me about 20 years to actually figure out how to trade it. I mean, it's one thing to understand the stuff macro-wise. It's a completely different story how to do this effectively on a day-to-day basis, which is always, a learning journey for all of us all the time. So, once I fell in love with it, I just became completely enamored in it. And we've been doing this since 2004. What is this? It's already 15 years that I've been trading it. But every year is different. Every year is new, and you never stop learning in this business. This is not a kind of business where you just master something and you do it forever. It's not like dentistry. It's not the same root canal every single time. Every single day in the market, every single month, every single year is very different. For example, we're entering into this year. It's going to be completely different year in every single asset class than I think anybody has ever seen or imagined, especially from the last few years that we've had. So you have to adapt and adjust constantly. I mean, trading is a sort of a very, very simple practice. There's only two trades. I always say this: that there's a million strategies, but there's only two trades: continuation and reversal. But the art of the game, the real great art, is figuring out, when to trade one, when to trade the other, and more importantly, it's the amplitude. It's like how much of continuation there's going to be and how much of a reversal is going to be. That's the really hard part. It requires constant, monitoring and experience and learning. So on the face of it, it's super simple. But in practice, it requires lots of nuance. That I think that's what makes the game so interesting.
Yeah. How did you personally learn these kind of nuances and how far the move can go? Did you learn it by yourself? Did that take a lot of time? Or was it with someone else and faster?
Like in every other discipline, there are people who are just naturally talented and can pick it up. Like you go swimming or you go running. There are some people that are going to just run the marathon and the first time ever in like 2.5 hours. And there are other people that's going to take them 20 years to get to that level. It's part of it is certainly your own ability, but a huge part of it, even if you have a lot of ability, this is such a challenging business that you constantly need, experience. And a lot of it is just, a lot of it is also psychological. It's the ability to control yourself. It's the ability to not make the same mistakes over and over again, which is something that, we all do all the time. And it's my attitudes, my views of how I traded just changed 180 degrees over the last few years. It's really interesting. I started out basically being always a fade trader. A fade trader is somebody who's always on the opposite side of trend, right? So I would always sell highs, buy lows, which is a very intoxicating and kind of psychologically, pleasant thing because you're always against the crowd, so you think you're always the smartest guy in the room. But a lot of times you're actually the stupidest guy in the room by doing that. And I've had to really reteach myself a huge amount of humble. I think the single most important lesson I learned in trading was to be humble, which is an extremely actually hard thing for anybody to accept. I mean, really humble, where you're not just like giving it lip service, but you actually, every single day, don't think you're the smartest guy in the room, but actually think you need to learn every single day. If you can stay humble, you actually are way ahead of almost everybody else, because I think we naturally tend to think, oh, I'm the smartest. I know what to do. I have 3 great trades in a row. I'm king of the hill. And then, of course, everything goes sideways right away. And also, if you're humble, I think you can survive the inevitable string of losses, because then you approach the market with a much more realistic sense that, yes, my strategy is designed for continuation, and now the market is in a reversal mode, and I have to accept that instead of trying to fight it and trying to figure out, the market, instead of trying to tell the market that it's wrong, So in many ways, that was like probably, there's 1,000 technical skills. Everybody can learn technical analysis. Everybody can learn fundamental analysis. Everybody can learn various aspects of execution and day trading techniques, but the right mindset to stay in the game forever. That's the key thing. If you can stay in the game forever, you will inevitably succeed, because everybody else just kind of burns out. I've seen so many people, do great and then burn out all the time.
Yeah. And that lesson on being humble is I think really big, because I've seen a lot of people that they get really attached to a system or a way to trade, and they cannot evolve when things go bad. And that's a big thing. I'm pretty sure you've seen that before in the past.
Oh, absolutely. And the thing is that when you when you have that attitude, and when you have the attitude of listen, there's only really 2 systems. There's a continuation system and a reversal system. Then you don't have that emotional attachment. You can say, well, it's failing because obviously it's in the wrong environment. And then I have to decide, do I want to keep the system going, or do I turn it off until the environment changes, or do I adjust it? Because the wrong environment, there's 2 things that can happen in the wrong environment with a system. One is that you simply just have, let's say, chop, right? So if you're in a continuation system, the long-term trending system, and the market is just simply range-bound, you're going to get destroyed, right? But the other more nuanced way that you can get destroyed in systems is amplitude. So let's say, just for argument's sake, you're in a system where you have 100-point stops, right, and 200 pip targets, just for argument's sake. All of a sudden, the market literally is 3 times as volatile as what you've set up your system to be. The system is not failing. what's failing is your ability to understand the volatility has changed. So there's like always two components. There's the type of market you're in and the kind of volatility imprint it's putting around. Like right now, well, I just tweeted this out like before I talked to you. Dollar yen was the lowest volatility currency pair for the long, like literally if you look at December, the average true range was like 45 pips. There was a point I wanted to unearth this tweet that I did a couple of weeks ago where dollar yen did not move more than 10 pips in 10 hours. There was a day in December where literally you could have fallen asleep, woken up, it was the same price, right? And then yesterday it goes 500 pips, right? So and today of course it's all over the place. And so this whole shift from zero volatility to least volatile instrument to most volatile instrument. And this, by the way, is universal. You can look at stocks, you can look at everything else. There's stocks that will sit dormant for a long time. And so you have a system that works on that. And then all of a sudden the stock just explodes in volatility. That, idea, that concept is very important in making sure that you're on the right side of the trade. It's not just the kind of market environment you're in, it's what kind of volatility fingerprint it's leaving as you're in the game. And it's very hard because you're basically in the middle of a storm with weather conditions are changing and you have to adjust and say, oh, it's no longer nice and sunny. It's starting to torrentially rainstorm on me and I better adjust. But that is a key to staying alive.
Mm-hmm. In those situations of like high volatility and big moves, would you recommend people to stay away from the market and stop trading for some time? Or should they develop a system for the market?
No, because it doesn't just die out and everything goes right back to normal. The next day it's sunny. It does like a massive amount of destruction. Sometimes the storm can go on for months on end, right? Like this volatility environment we're in right now. I have a feeling, I'm not 100% sure, but I'm pretty confident that 2019, it's going to be a completely different year. Like we've all been used to this very nice, quiet, low volatility. If you're in a stock market, the only trade you ever had to make was buy the dip. For the last 10 years, the only trade you ever had to make was buy the dip, which is why every index investor has beaten every active investor for the last 10 years. This whole idiocy of like this, if you want to get me on my little rant and rave about the idiocy of index investing, index investing is nothing more than buying the dip in a trend, right? All of a sudden this year, they're all going to just go, oh my God, I lost 50% of my money in 5 minutes. How did that happen? Welcome to the world, my friend. Welcome to how markets really trade. This volatility that we're seeing is going to get much worse, and you're going to see much bigger swings. I'm very confident we'll see a 2,000-3,000 point move in a Dow Jones index, sometime this year, and people are going to just puke up. They're going to, because they're completely unused to that. When you're used to just being force-fed tiny little, pieces of food. All of a sudden, when somebody comes in and there's a tidal wave and just sweeps you off, I think to me, the best aspect of being a trader is that if you're engaged in the market, if you're mentally sort of following it, very few things can surprise you because you've seen all these moves. You have at least some idea of how to react, or at least how to handle it both mentally and execution-wise from aspects. When all you know is buy the dip and hold an asset, that's how you get bowled over. There are 20-year stretches in the U.S. equity market when doing that kind of a thing would have literally produced you zero returns. Yeah, it's been great. Everybody is super smart now, but wait till next year when they get ripped up back and forth. So my point is that no, you can't escape volatility. You have to learn it. You have to accept it, and you have to figure out how to trade it. And of course, there's certain basic aspects of how to trade volatility. First of all, you trade smaller. So, you can use all sorts of formulas, but the idea is basically twice the volatility, half the size, right? You adjust your trading size smaller. You adjust your stops larger because the very nature of volatility means that the moves are going to be bigger, right? And so therefore you have to give it more room. Otherwise, you're going to get just stopped out all the time. And you actually may have to trade longer. In other words, longer time frames. I actually, I am by very nature. I talk about changing, teaching an old dog new tricks. I have always been a day trader all my life. I love the 5-minute chart. I love I love basically going flat at the end of the day. And I realized that is not an environment in which human beings compete against human beings. But in an environment now where human beings are competing against sub-second, super powerful computers, more powerful than those that launch ICBM codes, it's just you're competing against a robot. He'll always beat you. It's a stupid place to be on a short-term time frame. And I wrote this column the other day that to me the beginning, the minimum time frame that retail traders should even look at is 1 hour. And honestly, if you really want to have a higher level of success, it's the 4 hour and the daily chart that produces the much better returns. Even though it's so boring and it's like, it's like one trade every 3 weeks and you're bored out of your mind. And so that's why I mix and match. I kind of just sort of mix and match. But honestly, I was just looking over at my accounts, like the daily accounts, just 5 times the returns I can do 100 more trades on the 1 hour chart than I do on the daily chart. And the return on the daily chart is 5 times more than the return on the 1 hour chart, because it's the nature of the beast. The wider the time frame, the more margin for error you give yourself. That's the key thing in trading. The key thing in trading is to give yourself enough margin for error so you could succeed. The other thing, of course, is that retail traders just over-lever themselves completely. That's the other just tremendous sin of everybody who trades, especially in FX. We have 100 to 50. In the US, we have 50 to 1. But in Europe, in Australia, we have like 100 to 1, 400 to 1. If you're driving a Porsche down Broadway, where I'm sitting here in New York City, at 100 miles an hour, there is zero chance that you will escape unscathed. You will pretty much plow into some barrier and destroy yourself. You may go through 3 streets, 4 streets, 10 streets, 15 streets, and you think you're the best driver in the world. You will crash, and that's exactly what leverage is all about. So those are things you learn from the school of hard knocks, as I say.
Yeah, that's a really good example. I really love it. And one question I got a lot, especially yesterday because of the flash crash, is people asking, how can I prevent this? So is there, you think, a way to prevent these kind of move or not having a big profit? No.
Yeah, so. I'll tell you how you can prevent this, and nobody's going to like the answer. Have a frigging stop. Have a frigging stop on your position, because that's the only way you can prevent this. So basically, there's like two ways, just as there's just two strategies, continuation and reversal, right? There's really only 2 ways to trade. Is when people use very, very small targets, but really, really big stops, right? Insurance companies basically sell you $1 million worth of life insurance for a $1,000 premium, right? But they have much better information than you do. And the distribution of risks in real life is much more predictable than distribution of risks in stock market life. Stock market life, we all know distribution of risk is completely outside of a statistical analysis. So when you use statistical analysis in the stock market life, you're inevitably going to just get plowed, right? The idea, like, for example, this kind of a crash that we saw yesterday in the yen, that's in real life, that would be like a once every 10,000 year event, right? In the stock market, it's basically once every 3 year event. And so if you're trading on the assumption that this is never going to happen to you, but by definition, you're going to get bowled over. So you have to have an emergency stop in any of those situations. That's the only way you're going to prevent you. The question isn't how you're going to avoid it. The question is, how do you survive it? Because you can't avoid it. You will never know. And the other thing is, there was literally zero human beings who could have told you yesterday, even with Apple warning and everything else, that the yen was going to crash 500 pips in half an hour off of this piece of news. Like, why this piece of news versus, Trump's mad ravings that, half an hour before, or, China trade. The point is, you never know when you get this perfect storm combination of algos, news, and low liquidity, that things just get blown apart. But it happens all the time. I've lived through probably 4 or 5 of these things, in my 15 years of trading FX. So it's completely predictable. The question is, it's not knowable. I mean, it's predictable in a sense that it's going to happen. You just don't know when it's going to happen. So there's no way to avoid it. So the only thing you can do is protect it. I was actually very, very fortunate last night. I went out to dinner with my daughter. Completely missed the whole flash crash. But I had my algos on. The algos did like exactly what they're supposed to do. They stopped out of the bad ones, and they actually caught all the big moves on the other side. So I wound up like making money, and I was like, wow, this is nice. without stress-free completely. And if I was at a screen, I guarantee I would have made 1,000 mistakes because when you're in the heat of the battle, that kind of move, things move 100 points in a minute. You just have no grounding to really succeed. I think in the long term, and I've traded the Brexit crashes. I've traded the other flash crashes that we've had. I've traded the S&B crash. So it's after a while it all becomes the same. There's no way you're gonna be able to buy the bottom and sell the top.
Yeah. And the other thing is, I believe you're gonna be right sometimes with algos and sometimes wrong. So this is like both. Right. It could be really having a lot of money or not. So
and the thing that's sort of very damaging, and this is where having an algo really helps you. When you're wrong, usually in the market, it's you're wrong for like 50 pips, 100 pips, 150 pips, whatever. It's like it's manageable. You could kind of sit around and wait around, assess the market, do stuff. But when you get this big storm, right? It's like a tsunami, right? It's not like you don't get a chance to rethink your position. It's like you're wrong for 100, then all of a sudden it's minus 300, and then all of a sudden it's minus 500. All of a sudden you're stopped out before you even had a chance to rethink. Now, when you have an algo, the algo doesn't think. The algo just simply says, "Oh, I'm wrong, I'm out. I'm wrong, I'm out," and it's out, and it makes a decision for you, and that is a huge, huge benefit. I read somewhere, it's a really interesting article. The latest research in willpower and sort of all of this psychological research basically says that the big myth we have in America and the West is that just as long as you have willpower and discipline, you can overcome anything. You just focus on this thing, have passion, and you'll succeed. Nonsense. The way human beings actually really work is that we have a set amount of particular task, and if it's stretched out, if you're forced to have to make 1,000 decisions in the next 30 seconds or next 30 minutes, you'll have nothing left. That means all your decisions going after that are going to be very bad ones. You completely deplete your allowance of willpower, and so that's why when you leave it to willpower, I always say, if you trade without the help of an algo, you can make 100 perfect trades, perfect to plan, perfect to discipline, perfect to everything else, and then you'll get tired. You have a fight with your wife. You'll be sick. Your willpower will be depleted. You'll make one tiny mental error, and that mental error is going to unwind all those perfect trades. Like, in other words, nobody is 100% perfect in their discipline, So that's why you really need the help of machines to help you to help you conserve your willpower. The whole idea is it's not you're going to avoid making decisions, is that you're going to not spend your time making too many decisions. That's the key thing. If you can, control the amount of time you have to make decisions, you're going to make better ones just by the very nature that you don't have to spend so much. Like, I don't know if you trade yourself? Like, have you traded? Like, have you ever done have you ever been in a day where you 34 trades? You are so mentally exhausted by the end of the day, right? And usually, when you look around, when you look at the end of it, you pretty much like either a break even or marginally profitable. Whereas if you just made 3 trades, you probably would have been just as good or sometimes more profitable. And the reason why is because you made so many decisions, you were inevitably going to make bad decisions. That was a really mind-opening, fascinating discovery that I read about. It really made a lot of sense, and that's why you want the machine to make all the stupid decisions for you, so that you can at least just make the bigger tactical decisions that are important, for the overall strategy development.
Yeah, I love that. I'm not sure how long it's been, but you made the shift recently from manual trading to more algos. So right. I want to hear kind of how that happened. What was the decision for you to go that route, and how you did it, pretty much?
Well, that was it was a long process. So, we've been writing algos for a long time. I mean, part of my job is to essentially try to create strategies for my traders. And interesting ideas and strategies. The irony, of course, I always say this is very funny. I talk to my friend Robbie Booker all the time, and we always say that almost everybody in my chat room trades all my strategies much better. And by much better, I mean like 4, 5, 6 times better than I do, which I'm very happy about, because like I forget about the old ones, where I just ignore them. But as I started just kind of creating this whole library of strategies, I began to realize that, there is this whole idea of in the South, there's this expression in American South, lots of heat, little light, meaning you do a lot of action, but you produce very little results. I realized that I was kind of coming to that point where I was doing like, 20, 30 trades a day and just coming up like, with 5 pips at the end of the day. And I'm like, this is ridiculous. I'm just killing myself. And it's not producing the kind of results I want. So slowly we started, to migrate to a more algorithmic system. And slowly I started to move away from this whole idea of fading, of going against trend to trading trend, right? But here's the irony of the whole thing. So we started to develop this kind of overarching algorithm that trades trend, right? And it worked pretty well. It worked okay. And then as usual, this, by the way, is another thing that I'm a huge believer in. Nothing you think you start with will end up the way you think you start with. In other words, where you start in your strategy is never going to be where you end it. And by the way, it shouldn't be. And you should be open-ended and completely receptive to wherever the idea path, because the creative path is very, very winding. It is not a straight path from A to B. We had a relatively decent trend strategy, and just on a whim, I said, you know what? Let's make the reverse of it. It's not essentially a reverse strategy, but it's a strategy that kind of finds trend in reverses. Like just as we get the reversal moves, because my friend Jamie Satel always says the biggest trends start from reversals, right? So we added this kind of a reversal component, and we did that, and then that worked out well. And then I just kind of extemporaneously, experimenting. I said, what if we combined both of the algos together? So, if there was a strong trend component, the trend algo would take a trade, and if there was a reversal component, the reversal algo would trade. And sometimes, of course, they are on the same. So, like in other words, one is short, one is long, because the market's kind of in a changing regime. So that means you're effectively locking in a loss, but it's a contained loss, right? So for argument's sake, let's say if the stop is 100 on both, one of them is short at 50, the other one is short at the other 50, so you contained your loss to 50. But the interesting thing was, when we combined the two, it became a very robust structure, because what it was able to do was kind of go with the waves of the marketplace. When the market was trending, the trend component was working pretty well. The reversal was kind of very dormant. When it was kind of reversing, the reversal took over, and it was by no means perfect. And we're constantly refining. And now we're refining on like what currency pairs, what time frames, all that kind of stuff. I mean, it's a never-ending process. Now it just became a kind of a holistic, organic little system that we're trading and we're constantly managing. But what was fascinating is the more I let the algo make decisions, first of all, the hardest part is just not interfering, right? So I've learned, because when people are saying, oh, look, it's within 2 pips of my take profit. I got to take my take profit. It's got to take my profit. No, let it go. Let it go. Because once you sacrifice your take profits, you're sacrificing your risk reward ratios, and then everything goes askew. So letting it go, and then studying, well, where is it performing, where is it not performing, and then managing it has really helped me a lot. It's helped me to basically move myself out of the tick by tick. Let me watch every single movement in a currency pair, to a much bigger bird's eye view of what's really happening, what's really leading to success or failure on a bigger picture, and made me a better manager. You basically go from being, I guess, when you're trading systems, you go from being a worker, which is what you are. You're some kind of like, a production line worker, day trading all day long, making little widgets, pip widgets, to more of a manager, to more of a CEO, where the computer is kind of doing the work, and you're trying to figure out, well, how can I deploy my resources better? So it is a higher level point of view. It really reduces a huge amount of stress. You're not sitting there going, God damn it, I can't believe I missed this trade. I can't believe I missed this trade. It was funny. Dollar CAD we just traded. There was such a fast moving dollar CAD. Just, before I talk to you, I'm like, oh man, I can't believe we missed this trade. And then I look, and my algo took the trade, and I didn't even notice my algo took the trade, made the trade, bang, and I'm like, oh great, okay, I'm done. I'm done. I'm out. I'm like, thank you, my worker bee. And that happens. It used to happen to me all the time, where you snooze, you lose. I go get a cup of coffee. I'm like, what the hell happened? We moved 100 points. I should have been in this trade. That's, I think, an experience of anybody who trades any asset on a point-and-click basis. It's impossible. But if you have a rules-based system that's kind of helping you, you avoid a lot of those problems. And regret is just a horrible thing, right? So that's sort of where we are now in our progress. I'm very excited about 219 precisely for this reason, because I think we're going to move almost wholesale to rules-based. I even convinced my partner, who was just a hardcore prop trader, over the last couple of months, her systems are starting to do much better than she's ever done, on a prop basis. And so now she's really happy. And so, we're using all her rules-based systems as well.
That's awesome. Now, people might wonder, what does the work involve once you have your algos? Because you do for sure a lot of testing, optimization and stuff. But what else do you have to do on a daily basis as a systems or algo trader?
Yeah. So I'm actually the guy who doesn't do any optimization, doesn't do any backtesting. I don't believe in any of it. If backtests were great, how many guys do you know who have beautiful backtests? I know a million guys who've shown me beautiful backtests. The moment they go, if the backtests worked, we'd all be billionaires, because there's a billion backtests, right, that all look beautiful, and yet nobody has ever made money on a backtest, right? Because the market is, you don't trade history, you trade the future. So my view is, what I want is a general concept of a system. And then, so it has to be, obviously, don't get me wrong. It's not that I don't at all backtest, but I just wanted to, in the backtest, what I wanted to show me is that it's not a complete failure. It makes some sense. It does have a small edge. And generally, by the way, a 60-40 edge is about as good as you're ever going to get, right? So if I get a 60-40 edge, I'm super happy, right?
On a 1-to-1 reward to risk.
Yeah, 1-to-1. And the other big myth is trading 2-to-1, 3-to. You trade 3-to-1. The markets do not give you free dollar bills, and so you do the odds of how well you're going to do. I mean, I actually do this little test. You take just any daily chart on any currency pair, and you say, okay, I'm going to do a 5 pip stop and a 20 pip target, right? And how many winning trades are you going to get? Pretty much zero. Now, do it the other way. I'm going to do a 5 pip target and a 20 pip stop, which is a horrible risk reward ratio. I'm not advocating this. It's just simply to show people how stupid the ideas are. And you do that, all of a sudden, all your trades become winners. Now, of course, you're going to hit losers down the road. They're going to give back all the money if you have that risk reward ratio. But the point is, on an average day, the 1-to-4 ratio is a much better ratio than a 4-to-1 ratio. So, my view is that the best you can do is even money bets with a 60-40 edge. You can get anywhere close to that, you are way ahead of almost everybody around. So my process is actually, let's create something that makes, modest amount of sense. Let's trade it live. I always trade it live in live markets, because the other thing is, backtests always lie. And let me explain to you what I mean by they lie. They lie about where the prices are, lie where the execution is possible. You think you could have gotten like a end of candle perfect entry yesterday in dollar yen, at whatever the backtest told you, it would have been 200 pips. So backtests always lie. So I always like to trade it in real market conditions, but with small amount of money. I'm always trading, small amounts of money. Let's put the little reconnaissance soldiers out there. See how well it trades. You're going to learn so much more. All your assumptions are going to be completely upturned once the market goes live. You begin to understand where's the volatility envelope, what currency pairs are actually responsive to your ideas, which are not. And that's where a lot of the true work goes. All my work is in front testing, not even front testing, but front trading. I don't believe in the word testing. I believe in the word trading. So it's experience-based. All of my strategies are experience-based, and that's how, and then out of experience, you refine the rules, increase size, and create something that's tangible. That's my personal process of how I do it.
That's a really cool process. And how long does that front trading phase is? Does that last like a long time? Or
the rule of thumb is you got to have at least, if you're day trading, you got to have about 100 trades just to have an idea of what the hell you're doing. Whatever your assumptions are. If you don't have 100 trades, it's not even a legitimate sample size. So it takes a couple of months to babysit a strategy into a decent idea. And remember, the whole point is it's an evolving organism. So the 3 myths I hate is positive risk reward ratio, right? The back testing is a must. And the other big myth I hate is set it and forget it. If you're a systems trader, it's a set it and forget it. I don't do anything. Nonsense. You do a ton. There's no such thing as nothing ever is a set it and forget it. Do you think the NASA space probe is a set it and forget it? They just press a button and let the whole thing go? No, they're constantly monitoring the spaceship, and they're constantly adjusting to market conditions. Market conditions are just like weather conditions. They change all the time. There is no such thing as a static life, right? Yesterday is not tomorrow, and tomorrow is not today. You have to adjust and watch. It's just a higher level of management, but management is very much involved. I'm not, I don't believe in this whole let your strategy go. You want to evaluate your strategy, and I evaluate my strategy almost every single day on what's going on. I don't necessarily change it every day. Of course, I don't change it every day, but I evaluate it every single day. So you have to be involved just at a higher level.
Yeah. And I guess one of the temptation of people when they have an algo, like when they trade manually, is that they might say, well, the algo is not working anymore. It's like the results are bad sometimes. They stop it. So how often you go back and review the algo? Is there like every month, every quarter, or?
Yourself a question: what does it mean when it's not working? Right? Like the people go, you're losing money. That's so it's not. I'm losing money. It's not working. No, that's not the same thing. Losing money and it not working is not the same thing. And that's where I think a lot of people make the mistake. That's a very, very common, I think, rookie retail mistake. Understand what's going on. Maybe it's not working because the regime has completely changed. Like, what is the algo supposed to do? When is it supposed to be working, right? And also, I think a lot of times people have to be much more nuanced about what does it mean to be working. Like, for example, my algo doesn't work very well on dollar Swiss, right? But it works beautifully on euro dollar. Why? Well, because the volatility signature of the two pairs is quite different, and also the liquidity characteristics of this are completely different. So just because it's not working on one thing doesn't mean it's a not successful algo. What your job is to find out where it is working, right? I guess that's kind of the key thing. My constant process is to figure out as many possible instruments on which this is working as much as possible. That's what I'm doing constantly. I'm searching, and then when you have that kind of attitude, it makes it a lot easier because you're not as you're not as deterministic. You're not like, forget it. I'm leaving it, and I'm never going to trade it again. And then all the guys in my room who are much more intelligent and much more patient than I am, like keep on trading it and then come back to me like 6 months later. Hey, you know what? I made 2,000 pips from that algo that you gave me. And I'm like, what? Are you kidding me? Are you kidding me? And that was, that was kind of an eye-opening lesson to me that it's not the strategy, it's you. It's like, it's not you, it's me. That every trader should always look at themselves as the point of failure, not at their strategy, because usually that's always the much truthful point of view. You have to be kind of much more honest with what's going on over there.
Yeah, definitely. That's a really good lesson. Love it.
Yeah.
And so, for people starting out with this, would you recommend them to start with algos or start manually and then go to algos?
Well, I absolutely think if you're starting out, it's really, especially if you're starting in FX, it's really, really important to learn the basics. Now, here's the thing. Everybody, I think, gets very scared because they think algos, they think coding, they think, oh my God, I got to be a programmer. I'm not smart enough to be a programmer. I haven't coded since like college. You don't have to do any of those things. You do not have to do any of those things. What you need to do, can you use an app? If you use an app on your iPhone or on your Android, you can pretty much trade algorithmically because so much stuff is already pre-written for you. But what you need to do is just like, you learn Microsoft Windows, you need to learn these programs. I actually created lots of free educational courses for people to, how do I install it? How do I use it? How do I press this button? What does this button do? How do I put on a chart? All those kind of things. It's really, I think, fundamental for anybody who wants to start trading to learn the software and become a, proficient user of the software. Once you become a proficient user of the software, just by that very definition, your trading will improve incredibly because your execution will be on target, your sizing will be proper, your analysis will be much better because all of those things will be done by the machine, not by you. And you learn how to use, just like, like it's a difference between typing on a typewriter and typing on a word processor. Why would you use the other? That's really kind of the situation we find ourselves in. So I absolutely believe everybody should learn that, that aspect of it. And then essentially move up the chain. Some people will become so proficient they'll code for themselves. Most people will simply use other people's programs, but will create. The whole point is that you can create your own unique strategy of other people's logic. That's the thing. All of these things are adjustable. They're configurable. They are in many ways completely unique to whatever you want to do. And that is the excitement of trading. The great joy of trading is when you can take other people's ideas and customize them to yourself, to your own personality, to your own analysis, to your own time frame. And that is really where you actually succeed. Everybody in my see, I told you about the sirens. I told you about the sirens, right?
Wait.
We're in New York City, so you're gonna get sirens from me. Um, that's really where I find the most successful traders in my room succeed, is when they take other people's ideas and adapt them to their own personality and their own analysis, and that creates a level of consistency and a level of performance that is just much better. I mean, there is no original ideas. That's my fourth myth buster. I think as I said, there's only two ideas in trading: continuation and reversal. The most complicated HFTs, right, written by PhDs in Citadel, are pretty much trading just those two principles on very very fine timelines. So the key thing is to make something that is universal to you, that is unique to you, that is useful to you as a trade. And living now in a time where all this is available for free, it's like the basic foundational education you need to do just to start. And it's a lot of fun, because once you educate, you will have superpower. You'll have power that you never had with a point and click interface that you've had before.
Yeah, fantastic. And on that note, you're having a free event organizing. That's pretty soon, that people can join to learn how to use MT4 and the platform, and you have different speakers on that. So tell people where they can find this and when that's going to take place.
So it's www.mt4traderfest.com. Okay, or just simply, if you'd like, follow me on Twitter. My Twitter handle is FXFlow, and I have lots of links there. And yeah, it's basically, I had this idea when I said, all of these thoughts bubbled up in my head, and I said, there's so many people that could just basically if they just had the basic foundational education, they would improve their trading a lot. So let's put on a free event. Just no selling at all. I'm not letting anybody sell anything at this thing. It's just basically all education on a weekend. So we're doing this from 9 o'clock New York time, which is what is that, 1300 GMT, whatever it is in GMT. It's 5 hours. So it's, 1400 GMT, I think, right? Whatever. Till 12 noon New York on Saturday and Sunday. By the way, it's fully taped. So if you register and can't attend, you'll be able to watch all of it on demand in perpetuity, as long as you want. And I've invited 7 really interesting speakers. I invited my buddy Jamie Saitel, who's a amazing technical analyst, to talk about some of the big trends that he's seeing in the marketplace. I'm going to have guys talk about backtesting. So somebody who is sort of much more intelligent and much more mathematically inclined than me to tell people maybe that you should to backtest, some different ways. I'm going to have people talk about high frequency trading for retail traders, which is a very novel idea. And I'm going to be talking about this trend reversal strategy that I just talked to you about, and how the whole process of how we developed it, what were the key rules, what I discovered about its efficiency. So it's going to be fascinating. You're going to get like 3 very distinct, interesting strategies, lots of education, Q&A. I'm going to have my friend Adam Button from Forex Live. For anybody who trades Forex, he's going to talk about the advance of news algo trading, how news has really affected algorithmic trading, and somebody who wants to be a news trader could learn a lot about that. So it should be a really, really fun event. And as I said, it's totally free, so hopefully everybody will come in and enjoy themselves, because I wanted to start off 2019 on the right note, on getting retail traders with the tools they want. Oh, and I forgot, you want to trade out of the box. If you want to trade these scripts and trade these robots out of the box, there's actually a ton of stuff that is public domain, but it's very hard to find. It's kind of dispersed all over the internet. So what I did is I actually went out there and curated the best trading execution tools for you, and I put them all together into a nice little Dropbox folder. Again, all totally for free. So everybody who registers is going to get all these execution tools in addition to the stuff. So hopefully, it's going to make your life a lot easier, and make trading much more enjoyable for you in 2019.
That's awesome. So let me just put that link in the show note of the podcast or on YouTube below if you're watching this on YouTube.
Yes.
And people can just go ahead and sign up for that. That's going to be awesome.
Totally. Sign up. It's going to be essentially like about 10 days from now. It's January 12, January 13, next weekend. Not this weekend, but the next weekend coming up, And so we figured right after the holidays, everybody should be back, ready to go. And, honestly, in this kind of marketplace where we have volatility just exploding around us. This couldn't, I think, hopefully couldn't come at a better time because it's going to give people lots of good ideas of how to trade. So I'm very excited about it.
Yeah. And on that note, how can people find you if they want to connect with you or reach out after this podcast, this video?
Yeah, so I'm always available, of course, on Twitter at FXFlow. And you can reach me on my website, bkforex.com. That's Boris Cathy, bkforex.com. You can always visit us there. But honestly, the easiest way to interact with me is just hit me up on Twitter. And hopefully you'll come to the Trader Fest, and it's going to be 2 days worth of very interesting content. So I'd love to have you. And of course, if you want to come and join us in the chat room, you may decide afterwards to do that. But that's by no means a necessity. I'm just literally doing this as a kind of a big outreach to everybody. I think the other thing that sort of triggered me to do this is there's a lot of stock traders. There's a lot of people who traded stocks or stock investors who are now starting to discover, hey, it's not so much fun, buying the dip. It's not so much fun trading Tesla when it drops 30 points in a heartbeat. It's not so much fun holding Apple when it's dropped 70 points. And my point is that there's a different way of kind of trading where you can control your risk with much greater granularity, and that's why the FX market is so interesting. Big moves in the FX market is 3-4%, right? We don't have huge moves, so it's not nearly as volatile as people think, but it gives you that much greater sense of control. I'd much rather make 0.5% a week on a continuous basis than try to make 20% in a month and then drop 50% the next month. I think most people like to have that kind of how you can achieve trading in a more sort of a smoother, more controlled environment where you're not blindsided by these huge events that we're seeing around us all the time.
Yeah, fantastic. And as a trader, what kind of goals do you have for the future?
So, well, first of all, the goals is to get as much rules-based, algo-based as possible, right? So to create more and more strategies to diversify. That's the other thing is, that there are some myths that are actually truths, right? So the one truth in trading is diversification. Like even the same strategy across different time frames is going to give you much better performance than just one strategy on one time frame. These are things that are just really, really important. So my idea is to try to find a wider array of interesting non-correlated ideas. So it means trade more strategies. And my goals are very modest goals. I'm not trying to double my account in a month. I'm not trying to triple the value of what I want to do, because those are unrealistic goals. My goal is if I can make anywhere between 15 to 20% per year, which sounds so pathetic to to everybody who's a day trader is going to tell me, oh, you're such a wussy. I'm actually very happy. If you want to make 100% money in a year, you have to be willing to lose 50% of it. That's the other, by the way, that's not a myth. So that is one of those market truths that will always be there. Even if you avoided 1 year, you will learn that market truth the hard way. If you want to make 100%, you will lose 50% sometime down the road. And I'm a guy who kind of, I just don't want to lose more than 10, 15%. So I'm, my rate of return is more modest. That all goes back to being humble. The whole idea of like, what do you want to do? How do you want to structure your view? But you really need to be realistic. That's sort of my final point about trading. If you want to everybody wants to triple their account without losing a dollar. That's what everybody in trading wants to do, right? I want to triple my money without ever having a down day. Okay, maybe you can do that for like a year. I guarantee you, the next year you're going to lose half your money in one or 2 days. It's just the nature of the business. So I like to have a more less volatile equity curve. So that's my goals.
And in addition to this, I have a question I ask all my guests. If you could give people one piece of advice on how they can thrive as traders, what would that one piece of advice be?
So there's like 3 key things I think you need to remember. Trade low, meaning trade small means trade small size, Trade longer, meaning trade on a longer term time chart. If you're thinking of trading the 5-minute chart, go up to the 1-hour chart. If you're thinking of trading the 1-hour chart, go up to the 4. Always move up at least one time frame for where you want to be, just to give yourself, bigger margin of error, because margin of error is the key to success, and ultimately experiment. I wish there was like one brilliant piece of wisdom, but you yourself will discover what works best for you. But the only way you're going to do that is if you keep on doing it. I guess my final piece of advice is don't quit. Even if it sucks, even if you blew up your account once, even if you blew it up twice, even if you blew it up 3 times, right? Don't quit. It's like a flash of lightning. It does become obvious as long as you stay in the market long enough to participate. I think that's what most people just kind of most people get discouraged after 3 losing trades and walk away. And that's just way too early.
I totally agree with that. Boris Schlossberg, thanks so much for being here today. It's been a pleasure to have you here.
Thank you so much. It's been great to be with you guys.